As the NASDAQ is testing the 200 and we're just below the 200 period, we closed just below it, the S&P closed just above it, we're testing our 50-week moving average and the trend line in the weekly time frame. The market was sharply lower until just before Powell spoke, and then we had this recovery, again, bottoming tails, looks to be bullish hammer candlesticks, the S&P and the NASDAQ 100. Bottoming tails on the Dow and on the Russell. We had a rally. The Dow was up 222 points. Again, we were down in the market, and again, rebounding off of those 200 period moving averages on S&P and NASDAQ. Key horizontal support on the S&P. S&P was up 0.5% after being down for much of the session, up 31 points. NASDAQ was up 0.71%. The Russell was up 0.44%. The VIX was down by 6%, predicting down to 23.37. The VIX predicted today's rally. I told you that on Thursday. The VIX was predicting a bounce or a bottom. Today, we probably a bottom. We had a signal earlier in the week, gave us a bounce. This one is probably a bottom. I'll be talking more about that in just a moment. VIX nails it yet again. And as we're just below the 200-day moving average, we're testing our 50-week moving average. That's that green line you see right here. We tested it back over here, and we bounced, and that marked a bottom. We were just above it back over here. But this trend line right here, we're coming right up to it. This is our linear scaling. We've come right up to the trend line and our 50-week moving average. Now, we broke the 50 level, so that's not good. But that's also marked these other bottoms here along the way for the NASDAQ. Over here at the 2023 low, we had just breached that 50 level on the RSI, and we were just above our 50-week. Here, we had breached the 50 level, and it marked this low right here. Here, we had the testing of the 50-week and the trend line, and it marked a bottom right there in 2024 at the August low. Higher low right here, we have breached the RSI, and now we've done it again. Now, we've had this multiple point of negative divergence, but it's taken us back, and I talked about these trend lines. The trend line here, trend lines with the log scaling, the last couple of weeks, and I've been watching this trend line. So we've had a sell-off now for 2.5 weeks, and we've hit the 50-week, and we've come back to this trend line. It is likely we're going to bounce right here. The NASDAQ's topped, we're going to stop making new highs, come back and break this trend line. But if we merge with the S&P goes higher, then we can go further sideways, or we can try to make a new high. But we're hitting a major trend line of support, hitting the 50-week moving average. I told you we were going to get a sell-off. Now the people that never saw it coming, never saw the top, now everybody's bearish down here telling us we're all going to die, and yet we're hitting major support, a major trend line of support for the NASDAQ 100. And I think you're bottoming. I think you're forming a bottom, and the VIX is predicting that we either have a bottom or a bounce here with Friday's rebound, bottoming tail, another bottoming tail surrounding our 200 period moving average. Both NASDAQ and S&P, you got a very good shot that we have now bottomed. Bullish falling wedges. Watch the video all the way through. It's our trend line on the 2022 low, and if I said 2023 a moment ago, if I did, it's from the 2022 low. And again, that was where the bottom was, okay? So again, we're hitting this major trend line where it's marked bottoms in 2023, right here, late 2023, on into 2024. And now here in 2025, do we get a rebound at our 50-week moving average and this trend line? I think you got a very good shot. We're going to attempt a rebound now. Got a very good shot that we have a bottom in. Watching, can the NASDAQ make new highs or not? Hitting key support. 2022 trend line on the NASDAQ. With our log scaling with the NASDAQ, we're slightly breaching that level this week right here. So again, something worth watching. I watched both the linear and the log scaling trend lines, and this again goes back to the 2022 low. It will be interesting to see if we rebound off of that linear trend line that we are tagging at that 50-week moving average. If we rebound, do we get a lower high, or do we build upon this and get another reference point of a divergence? We very well could. I think S&P is going to new highs, but NASDAQ sometimes diverges with it, so we'll be watching to see what happens. But bouncing with that linear trend line, breaking slightly the log trend line from the 2022 low. Linear scaling S&P is breaking the trend line right here with the linear scaling from the 2023 low. And again, we've had these divergences. We've had other divergences that have given us other points of volatility. We'll be watching to see what happens here surrounding our 200 period moving average. They're in the daily time frame, the 200, and we're hitting the 50-week here in the weekly time frame with our linear scaling here, slightly breaking that trend line. Moving into the negative region with the RSI for the first time, and it didn't go like NASDAQ where it moved into the negative region. It's been holding since the 2023 low. So this is the first time we're below 50 since 2023. And we'll be watching to see, do we get back above that 50 level? Right now we have a 50-20 sell signal and that we're below the 20 and we're below the 50 with the RSI this week dropping below 50. We'll see if that signal goes away or does it remain. I think you're going to try to bounce here, and then we'll see, do we get back above that trend line? NASDAQ is bouncing off the linear trend line. S&P slightly broke it, both of them testing their 50-week moving averages over the last 2.5 weeks now. And then here with our log scaling, the S&P breaking the 2023 trend line here this week. We tried to take it out last week. We got a bottoming tail, and then it didn't get the follow through in the weekly time frame, and we ended up taking out that January low. We came back to the 50-week moving average. You got another trend line here. Again, sometimes trend lines change. We're watching to see if we bounce off that trend line with our linear scaling with the NASDAQ, and if we do, I'll be watching the broken trend line. Do we end up getting back above that? And if you do, then again, this trend line could just be changing slightly. But we're trying to test these 50-week moving averages in the weekly time frame. We're testing and holding above them, bouncing off of them with the lows in the weekly time frame. And then with the daily time frame, we're trying to bounce off of the 200 on the S&P and NASDAQ's, just testing it slightly below it. P was down 3.10% for the week, down 184 points, testing this level. Or 50-week, I'll be watching again. Does the RSI move back into positive territory? First time we've seen it. It did mark a bottom when we dropped into levels below 50 and then got back above it. It marked a bottom here. Do we see the same thing here? We'll be watching this closely. Again, believe it or not, this divergence may not be done. It is forming a multiple point divergence already. It may not be done. We might end up getting a quadruple negative divergence. Really, we have a triple negative divergence. With our February high, we might end up seeing a quadruple negative divergence with the weekly chart. So again, I'll be watching these 50-week moving averages. I'll be watching the 200 NASDAQ hitting that major trend line of support for linear scaling. By the way, as it did it, we dropped 3.27% from the previous week, and we're down 683 points. So I'll be watching, do we see the RSIs get back above 50 if we rebound off of the 50-week moving averages and this trend line bring back up that 50 one more time there. So again, good chance you've got a bottom here, and then we'll see if we can make new highs or not, or if NASDAQ can't make new highs. I think S&P still will. We'll be watching NASDAQ, but bouncing off that 2022 trend line. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please take a moment to support the channel. I don't have any sponsors. I turn those offers down. I just want a direct relationship with you. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site, and you can donate any amount you want to make it a recurring donation. If you do that, I thank you. Thank you for your consideration for that. The Russell did end up moving to a new low here. Go to the S&P. I was watching to see if they would diverge. I was watching the same thing with the VIX. The S&P is testing the 400 period, the 200 period. The Russell is testing the 400 period moving average and forming this little bullish divergence, very similar to the bullish divergences on the S&P and the NASDAQ with the RSIs. Again, today's rally, Friday's rally on the S&P 500 was predicted by the VIX. I talked about this in yesterday's video, and I told you we still may go lower before we got a rally, but the VIX was predicting that in the next two trading sessions, either on Friday or Monday, that we would have a positive close that would either be a bounce or a bottom. The VIX was correct. And we got that signal on Thursday. S&P sold off. The trend lines that I was talking about in Thursday's video, bounced off those trend lines, and we got a bottoming tail, and now have completed what looks to be completing our divergences, our quadruple bullish divergences in the 60-minute time frame on the RSIs. NASDAQ and S&P, it looks to be done. I told you we still may not have it finished. We talked about this at great length and detail on Thursday. I told you I'm looking for a bottom in this area, and maybe the VIX has now correctly predicted that. The VIX is predicting that we either have now a bounce or a bottom. We're now doing, and again, hitting key major horizontal support that I've been talking about. A signal on Monday where we saw the sell-off on the S&P there on Monday, and the VIX surged by 16%. This is the previous signal, and I told you with that the VIX was predicting in the next two trading sessions a bounce or bottom. At that point, today we didn't get the bounce or bottom. We got a break of the January low, but we tested the 200 period moving average, and the VIX predicting the previous day on Monday. Tuesday we went lower. The VIX predicted that Wednesday we would have a bounce or a bottom, and we got the bounce off of the 200-day moving average. Are you picking up what I'm throwing down? VIX was correct again. Now, I told you that could be a bottom. I told you those divergences on the 60-minute charts may not be done yet. We talked about this at great length of detail. We talked about the trend line, the parallel boundary that was just below the 200 period moving average, which we hit on Friday. I'm looking for a bottom in this area. Oh man, the herd, the bears, perma bears, which are going bananas. You got the herd, which now they're extremely bearish. They're extremely bullish back up the tops. When I called the top over here and over here and over here, the December peak, the January peak, the February peak, they were extremely bullish. Now they're extremely bearish. So again, we're likely in a bottoming process, and that very well may have, as I said, come to a conclusion. I told you that was a possibility on Wednesday with our bounce off of the 200 period. We went down a little bit further and we tested it below the 200 period here on the S&P 500, and then now tried to rally during the session and then sold off about the time Powell began to speak. We saw the rebound back up, and we ended up with the positive close. And again, people get so emotional. We were dropping, reading comments on social media. One guy saying he's selling everything, but lower. And again, selling about. That's what happens at bottoms. People like to buy tops and sell bottoms. That's what the herd does. You want to do the opposite of what the herd does. Now, when I call the very day of the top up here, and the very day of the top, back in December, and told you that we were going in January, that we were going to predicted that day of that bottom, and predicted that we were going to get the rally, but then told you we were going to pull back at the deep seek sell-off and later the sell-off with the tariffs to get the back test, break out of the trend line. These tops back in December, January, and February, the herd wasn't bearish there. They were complacent. They were telling us there's no possible way this could happen. Now, because I'm saying we're going to bottom surrounding the 200 period moving average, that we're going to develop a bottom in a bottoming process, which is probably done now. I think the VIX is probably, and I told you it may be done earlier in the week at the 200 or just below it. And I've showed you the trend line. People telling us there's no way we're going to rally back up, and that now the bottom is going to fall out of the stock market. Then they're going to tell us, oh, we're going to go back up and fill the gap and for Monday. And there's two groups. You got the herd, which is now extremely bearish. And then you got the perma bears, which are just, they're calling anybody that thinks that we're going to get a rebound or go to new highs, especially calling them just every name in the book. Getting very emotional at tops and bottoms. Remember that. But the VIX was correct. I think the VIX has now correctly predicted the bottom surrounding our 200 period moving average and a trend line, which I've been talking about, which now we're being told there's no possible way we are going higher. And yet we're probably about to experience a massive, massive rally. Have, again, a boatload of bottoming signals galore. That's what we have right now. People that are bearish, they weren't bearish back when I called the top. Did we get a sell-off? Now we went lower than I thought a little bit. This scenario could be in play 2 weeks ago today. Also, I talked about the VIX possibly getting a lower high. Sometimes the VIX tops ahead of the S&P bottoming. Here we have a bottom and a peak with both the VIX in our most recent price action here. Still had that scenario because back over here, we had the peak over here, and yet it's lower right now, and yet the S&P moved lower. We did not move higher on the VIX. So you still have the same signal I talked about, but not in the most recent price action. You got it from back over here with the beginning of the sell-off there in December with the Fed reducing the amount of rate cuts they were penciling in for 2025. Actually still have the signal, even though it didn't form right here in the most recent price action, you still have it surrounding our 200 period moving average. In order for a bigger rally to happen, we've got to drop back down here, take out the 50 period moving average. 50's gotten back above the 200 period after briefly dropping below it. I was warning that, again, to be watching for a topping process because, again, the VIX is having the 50 get back above the 200. That's not good going forward in this long trading range. And again, we've gotten above the 50. The 50's gotten above the 200, back below it, now back above it. So again, we'll be watching that. Now, I don't believe the top is in yet. A lot of people think that because they base things on their emotions. And again, many people, majority of people did not see a sell-off coming. And I predicted that top, 19th, calling that day of the top, predicting the sell-off. Now, we've even gotten a bigger sell-off than I thought. I told you what would happen if we took out the January low. Now, since I called the day of the top on February 19th, 2.5 weeks ago, S&P's now lost 7.81%. Now, I told you if we lost the trend line of support, if we lost the gap fill here at the 78.6 Fibonacci, that, again, we would move to take out the January low if those levels of support did not hold, because it is about support and resistance. And we ended up dropping down to this support, and we have support here. There's support over here. October, this was the November low before the election, and now we're hitting the support again. And VWAP support, I talked about the VWAP support and the 200 period moving average, and now we get a bottoming tail at this key support. I predicted the day of the top correctly, and I predicted this bottom correctly, predicted the rally. And up here I told you we formed a divergence right here with these two bars. I told you we are going to pull back and back test this level. I was correct about that. I predicted that, and this bottoming tail here, the rebound back up, predicted the December top, the day of the December top correctly. And with the help of the 60-minute chart, with the help of support and resistance, trend lines, nailing some of these turns. Now, I was correct in predicting the top, okay, and I told you that we're going to get a sell-off either to the trend line, to the gap fill, or to the 200 period moving average. Those are my three levels that I laid out 2 weeks ago, and I gave you different Elliot wave possibilities. Some of those counts are going to get invalidated, and now we know which count was valid. Rest of the 200. Predicted the top correctly and predicted that we were going to get a sell-off. I thought, and I have the guts to tell you what I think. I told you I thought there was a good chance that we would see the January low because Bitcoin was already bottoming. Bitcoin bottoming allowed, and it rallied off of those lows, could have allowed the S&P try to get a higher low above the January low. But the S&P joined Bitcoin, and it also went down to the 200 period moving average. So while I was right, I told you I didn't think we'd take out the January low, but I told you we could. And if we did, we would go down to the 200 period moving average and this key support area. I give you all these scenarios. I was right about the top, the day of the top. I was right about the sell-off. We went 1.82% below the January low. What did we do? We rallied right back up to it on Friday. So we dropped and we rebounded back up. And again, I presented this scenario to you 2 weeks ago before the sell-off really got underway, back up at the top here. You're first breaking down right here through those scenarios. Oh, down here, I tell you, I'm looking for a bottoming process. Up here, I told you I thought we would peak, played out. Now, again, quickly, 2 weeks ago, well, actually 2.5 weeks ago, I told you that we had peaked right here. We're going to get a sell-off February 19th. The next day on the 20th, we failed to get a confirmation of the breakout above the January high. I talked about that as a failed breakout. Then 2 weeks ago today, I told you that we had that reversal confirmed and we have broke the trend line right here. And I told you, again, the target levels where I was looking at on Wednesday, Thursday, and Friday. But 2 weeks ago, I gave you the Elliot wave scenario, different scenarios 2 weeks ago. I told you the counts were going to be eliminated till it came down to one count. And here it is. This is it. The wave 4 did not finish at the January low. That again, we dropped 1.82% lower and then rebounded back up off of the 200 period moving average that it's completing here. VIX is suggesting that the bottom may be in on Friday. Gave you 3 target levels. I told you if we held above the January low, you could try to bounce at the 2023 trend line. When I predicted the January bottom, the day of the January bottom, I told you on January 9th and 10th that we were going to bottom the following week and likely at that trend line and the gap fill for the CPI over here, which we did. We did do right on the nose. We could try to bounce right there. Well, we ended up breaking that level. And I told you if that level broke at the 2023 low, then I was watching the gap fill at 58.43, which is right at the 78.6 Fibonacci. And I told you, again, it's leaning towards one of those two targets, likely holding above the January low. Well, Tuesday we broke below the January low, tried to bounce off the 200. Again, the VIX was predicting a possible bottom earlier in the week, and then on Thursday again it told us that we were going to see a bounce or a bottom on the S&P by Friday or Monday, and we got it on Friday. So the VIX was correct. So again, we either have a bounce or a bottom on our hands. 3 target levels I gave you 2 weeks ago, and talking about the failed reversal, the failed breakout back at the top. I gave you this trend line, I gave you the gap fill and the 78.6 Fibonacci, and I gave you the 200 period moving average. I told you if we ended up losing this target or this target right here, which is what I thought was more likely, because that's at the time where we were seeing Bitcoin bottom out. So I told you we got a shot, but the S&P ended up following Bitcoin down to the 200 period, and that's what Bitcoin ended up doing. So I was right about the top, called the day of the top, right about the sell-off, but we went beyond my target level, my second target level here with the CPI gap fill, and we went a little bit lower to this target, which again, we talked about 2 weeks ago. We talked about this trend line and the 200 period moving average, and I talked about on Thursday this trend line right here being a level where it's intersecting with that trend line, and that's where we tagged and found support at those levels today. So you have a confluence of support here, and you're getting the bullish divergences on the daily chart, and you have quadruple bullish divergence on the 60-minute chart. So I was right about the sell-off, right about top, but we did go a little bit lower than I thought, taking out the January low by 1.82%. The January low was likely going to hold. I always tell you what was going to happen. This is one of my scenarios that wave 4 didn't finish over here, that it finished here. Again, but some absolutely amazing calls. Call the top and the sell-off here, correct. Told you we were going to pull back and back test right here after I predicted that rally. Called the day of the bottom right here. We with those 2 bars, we formed a bearish divergence, and I talked about the sell-off. But these highs, called the day of the top right here in December. Told you if we had a breakdown of the triangle that we get a bigger sell-off. Go back and fill the election gap higher, the election gap right there. Called the bottom right before the election. Called the bottom right there. Called the September top. Pardon me, October right there. And again, the day of the bottom right here. Called the top over here in September with the divergences, and again we have not only the divergences in the daily time frame, but we got them in the 60-minute time frame, which are much better. Called the very day of the top for the July peak. Here I was late on the August bottom. I still thought we might go a little bit lower, but a couple of days later we got a higher low, higher high, and I said that bottom was in, but I was a little bit late with that. Talked about the rally with the Fed that I told you we were going to go and continue to make new all-time highs with the Fed starting to cut rates in September. So I've made some pretty amazing calls. I'm not perfect, but again, I always tell you what I think. and these are the three levels that I was looking at. I want to continue to point out my signals remain consistently bearish through the decline. Still bearish right now, and if we start to rally back up, they'll have to flip back to bullish in order to either get a rebound or reversal. The stochastic and the RSI and the MACD is very, very oversold now, showing we're very, very oversold. I think that we're going to see a rebound, especially with the quadruple bullish divergences I think are now complete on those 60-minute charts. I was looking for a bottoming process here because of the signals I was getting on the VIX, because of the triple and quadruple divergences that were forming on the RSIs with the NASDAQ and S&P 60-minute charts. I think you probably now have completed those quadruple bullish divergences on those hourly charts. I know we're going to get a rally back up. Why? Well, the 50 period, you see that green line up here? It's not below the 200 period moving average. Okay, we're going to get a rally back up, and then we'll see if we can go to new highs. My guess is that we're going to. People are extremely bearish right now. Dare to think that Bitcoin, or if you dare to think the stock market is going to rebound back up or move to new highs, you are just a complete Neanderthal. People that never saw the top, never saw the sell-off coming, and now they turn super bearish. But again, wanted to share that with you about the 50 just real fast. Now, while the S&P is testing the 200 period moving average, it is forming a potential bullish falling wedge. Tried to break out ever so slightly here. We'll see if that's a breakout. NASDAQ did not, but it's got the same exact pattern. You've got the little bullish divergences going on with the RSI, and again, our MACD is very, very oversold here, and we have a bullish divergence on the stochastic, which it did turn up there on Friday. We had the sell-off, everybody, we're all going to die, and again, we hit the trend line of support, and we bottomed out. Told you I'm looking for a bottom around the 200 period moving average. We tagged it. The VIX said might have a bottom there with the reading we got on Monday being just above it. We got the rally. It said a bouncer bottom. It failed, and we went back for some more testing, and now the VIX predicted on Thursday a bouncer bottom. It's likely that we have now bottomed, and it's likely the VIX is correct yet again, as it so often is. Predicting a bouncer bottom, I think we've likely bottomed. The signal earlier in the week wasn't finished because we still wanted to go down and test the trend line of support, a couple of trend lines, and tag major horizontal support as I'm talking about in this video. We've got bullish divergences in the daily time frame. We have bullish divergences, quadruple bullish divergences, the strongest reversal signal in technical analysis on those 60-minute charts. At the bullish falling wedge, we've had a failed breakout. Remember I talked about the failed breakout right here? You closed a point above the January peak, and then that really wasn't the breakout. This bar was. There was no confirmation, but I talked about the divergences as we hit this trend line here in the daily time frame from our December high. NASDAQ's got the same thing going on. We're just below the 200 period here. Again, we went back and filled the election gap, but then we closed right back above it now, just ever so slightly above it. We got a bottoming tail. We got hammer candlesticks. And we've got the bullish divergences. You've got it here. And again, I told you Thursday, we may not be done with those quadruple bullish divergences. We still may go lower to complete them. We did on those 60-minute charts, but they're likely done now. This is probably completing a bottom based on those divergences completing on the 60-minute chart. You've got the bullish divergence right here on the RSI. MACD, again, very, very oversold. And then our stochastic also forming a bullish divergence. The NASDAQ went lower, and the S&P got a higher low. The stochastic, I think a bottom is going to develop around these 200 period moving averages, and Bitcoin drop below it. Now we see the NASDAQ and the S&P drop below it. See if we attempt a recovery. Falling wedge patterns forming. About these quadruple bullish divergences. Here it is on the NASDAQ. Again, I told you we still might go a little bit lower to complete it. We had that low and attempted recovery on Thursday, but I told you it still might not be done, and I told you the S&P might go hit the trend line, and we talked about the MACD is rolling over. It may not be done. We can still go lower and complete these patterns, but they're done. Now it sure looks that way. Quadruple bullish divergence, triple bullish divergence on the MACD. These are the strongest. Quadruple and triple bullish divergences are the strongest reversal signals in technical analysis. It was these multiple point divergences that gave us the sell-off here, that gave us the bottom over here at the January low. Multiple point divergences produce a change in trend with the swing move here. So bullish divergence is now complete on the NASDAQ. Beautiful bullish falling wedge. If we get back above the 50 in the cloud here, if we start moving towards these 200 period moving averages next week, that's likely going to be the case. S&P 500 60-minute chart, quadruple bullish divergence looks to be now complete. I told you we still may go a little bit lower, and we did. Could bottom, there's still risk of going down to the trend line of support that we talked about on Thursday and that I've been talking about over the last 2 weeks. That trend line of support, if we ended up going to the 200 period moving average, and we hit it, and Nvidia hit its trend line, got a hammer as well, got a bottoming tail. So again, bullish divergences here. We have possibly a slight breakout, not on the NASDAQ, but on the S&P, a slight breakout of the bullish falling wedge here. Okay, and a larger channel within that channel, the bullish falling wedge. The quadruple bullish divergences, and again, these 60-minute divergences have been absolutely incredible. Over here, the December top and these short-term bottoms that ended up giving us that gap fill from the election at 57.83. The divergence over here in January after the rally, and the bullish divergence right here that marked this multiple point divergence that marked the January bottom. Absolutely incredible signals here in the 60-minute time frame. And this signal is not going to be any different. It's going to play out beautifully. A big rally back up. This is we're going to new highs. Quadruple bullish divergence now completed on the 60-minute chart. We have bottoming signals galore everywhere. Again, looking for that bottom surrounding the 200 period moving average. And again, we now have a divergence. Triple bullish divergence on NASDAQ, S&P, the MACD moved to a new low, but we now have a bullish divergence. So again, this could be done. It was a bearish divergence that gave us the sell-off. Remember, we talked about the bearish divergences on the 30-minute chart, on the 15-minute chart, and here on the 60-minute chart. That marked this top right at this trend line of resistance. Again, earlier in the week, I talked about Nvidia. I told you I was watching this trend line, and we talked about it breaking the 200 period moving average last week. And I told you if we broke that level and we kept going, this is a trend line I was watching. We've now dropped 25% after filling the gap. We'll be watching to see if we can rebound right here. You got a possible. Now, again, I keep telling you, I think Nvidia's already topped based on the weekly time frame, but you do have a possible bull flag pattern right here. Again, I think that we topped at this trend line as I talked about, and again, with the November peak and the January peak there. Watching, can we get back above the 200 period moving average? Nvidia is about to get a death cross, and I told you it might peak before the stock market tops, but we still may attempt to get a recovery or even move back to the channels here. So we'll be watching that, and we'll be watching to see if we get a death cross in the coming days ahead in the month of March. But NASDAQ broke this trend line. We'll be watching that. That's up near the 50 period at the moment. We'll be watching if we try to get a rebound here with our bullish falling wedge. Do we stop making new highs on the NASDAQ? Again, sometimes the S&P and NASDAQ diverge at turning points. Here we have both of them make new highs in the month of February. At our peak there, and I talked about the fill breakout on the NASDAQ 100 as well. As this divergence was developing, we had fill breakout on the NASDAQ. Again, we tried to get above the black dotted line right here. Tried to get above that 200 period. Got a doji, and then again, you couldn't confirm it the next day, and you got a reversal, and that eventually led to this sell-off. We'll be watching the 50 and the 100 in the cloud here. If we get a rally back up, we'll be watching these levels as we go on out March and then probably towards the beginning of April. Clear these areas, and we'll be looking at this peak right here. But again, if Nvidia can't break out of the falling channel, that could be problematic for NASDAQ.